Hi, my dear friends. How are you doing? I hope you can hear me. Hello, mic testing. Yeah, my throat is gone. So let's do slowly and as much as possible. So today we will be doing some miscellaneous topics, my dear friends. Let us come to, if you remember, we had done bond washing transactions in one of the earlier classes. There are other two small things. This is, I am reading page number 05. So we'll finish off these two areas. And then if you remember in deductions, chapter 6 deductions, I told you ATC, ATD, etc. You can probably we can see it later or you can revise. So I'll at least do the important areas. See, we had finished the income based deductions fully, if you remember, but the what do you say, expenditure based deduction, so to speak, ATC, ATD, ATC, CD, all those things. In that important areas we will cover. Uh, these are the areas which will only come in the exam because other things are all covered in CA Inter. CA Inter portions they'll not ask. What they'll ask is some hidden points which will also come in international taxation. So today's class will be only focused on deductions under chapter 6A, and of course bond stripping, interest stripping transactions will finish it off. Bond washing transactions already done. This is in O5 and this deductions will be H onwards. So these two miscellaneous areas if we finish, then in the next class onwards we can start off with capital gains. So next set will be around 4-5 classes, whatever it takes will be capital gains. Capital gains also will not be going, whatever was taught in Inter. Of course, we'll be telling everything. I'm not saying that we are skipping anything. But what I'm trying to tell is we'll concentrate more on what can come in the exam rather than going everything full in depth into the area which you already would have studied in Inter. Having said that, if you say, sir, I have not touched anything in Inter, don't worry. Still, the classes will be extremely relevant and you'll be understanding everything. That is my promise. So we'll be going with the basics itself, going from the basics. But what I'm trying to tell is, in Inter, the concentration will be something else in capital gains. And capital gains is a very important chapter in CA Inter. Then CA final, it may come for around 4-5 marks as different adjustments. But let's not concentrate on CA Inter syllabus, which will only give you like, oh, if this is a capital asset, is that a capital asset? No. Let us discuss more on the CA final aspects. But as I again repeatedly am telling you, even if you haven't studied Inter or even if you have forgotten Inter, capital gains, you would have cleared. How you cleared, how I cleared, I only know, sir, and all. If you tell also, what I'm trying to tell is it will become very easy. Don't worry. Okay, so these two will finish off in this session today. Come to page 05. Bonus stripping, bond washing, and tax-free interest stripping transactions. Let's just do the interest stripping portion once because bond washing is already done, guys. 94.1 we are done. A few classes ago. Interest stripping transaction 07. So guys, think about it. What I'll do for tax planning is there'll be a date called as the record date. What is the record date? It is the date on which interest is paid. So basically there are many bonds, debentures, etc. So wherever interest is paid, just on that day, that is called as the record date. So I know on which day interest is paid, and the bond value, let's say I bought something at 1 lakh rupees at let's say 4% interest. Just around the record date, the value would be around 1,04,000. Obviously, it is including interest. So what I'll do is at the time of this, I will purchase this just before the record date, and immediately after the record date, guys, immediately after the record date, the bond will lose its value because interest is already accrued. So this, let's say, will be selling at 1 lakh rupees immediately after record date. So what I used to do, I buy at 1,04,000 and sell at 1 lakh. So what will my short-term capital loss? It will be 4,000 rupees. This 4,000, I will use it to set off against my long-term capital gain. This is the thing that I used to do. Apart from that, guys, this interest that I am getting, 4,000 rupees extra interest, that is also tax-free. So now let us assume that this is 99,000. So what will be my loss? 5,000 rupees. And here, this is also interest-free income. Plus this loss also I get to set off. Super tax benefit. super tax benefit. So to curb this from happening, what section was inserted? Check this out. 94(7). According to 94(7), in certain cases, loss arising from transfer of any security or units is not allowed to be set off against other income. If any person buys or acquires, see, around the record date I will buy, no? So this had to be stopped. This tax planning had to be stopped. How did they stop this tax planning? Very simple. They said in and around the record date, 3 months. 3 months is a good enough time. Plus or minus 3 months. If anybody buys or sells any securities, then they are not allowed to set off the income versus the expense. We'll see it with an example, you'll understand. Any person who buys or acquires any securities or units within a period of 3 months prior to the record date. Such person sells or transfers such securities within the period of 3 months after such date, or such units within a period of 9 months after such record date. Right? Interest stripping transaction. So certain units, units of your mutual fund, etc., 9 months time for that. Whereas securities, 3 months time. Securities, 3 months time. So securities will be 3 months, and units in mutual fund, etc., will be 9 months. But let's just stick to the securities here. Securities means what? Your interest filled securities. It could be anything for that matter. It could be your bonds, debentures, etc. Whereas this units would be units of mutual fund. Anyway, in the mutual fund, when we are discussing those other trusts, etc., again we will check that later. But yeah, buying or acquiring any security or unit within 3 months, or selling or transferring securities within 3 months, or such units. Units would be prescribed units, as like mutual fund units, etc., within 9 months. So buying or acquiring 3 months, selling or disposing of 3 months for securities and 9 months for units is exempt under income on which, or units is exempt under Income Tax Act. Then the loss, if any, arising on the transfer of such securities, in my example, loss of 5,000 or 4,000 initially in my example, shall be ignored to the extent of income therefrom for the purpose of computing his taxable income. Purpose of, taxable income. Right. Then you can write down one dialogue. If loss is less than or equal to income received, it says what? Such loss shall be ignored. Correct? If loss is less than income received, if the short-term capital loss is less than the income received, then 94(7) will not apply. Basically, 94(7) will only apply if, the set off, etc., will not be allowed to you. They are saying that the loss will be ignored only when the loss is greater than the income received. The loss is greater than the income received. When we do a sum, you'll understand, guys. Very simple. So guys, if you see, 94 covers holding of securities both as capital asset as well as stock in trade. Hence, interest stripping transaction will apply both to investor as well as trader. Investor also, trader also. Check it out. Nimit acquired 10,000 securities of Nomura Private Limited for 400 per share on 1811. Company fixed record date as 112 and granted interest of 20% per 20 per security. This interest is notified for exemption at 1015 by the CBDT. It's a interest-free, tax-free interest income. Securities were sold by Nimit for 410 per security on 1 after receiving interest. See, Nimit had acquired and sold tax within 3 months. Net result is a short-term capital gain because he's selling it at 410. This will not come. I told you. Is there a loss is less than income received? It's not even a loss, it's a gain. This section will not apply. As there is no loss, section will not apply. However, that 2 lakh rupees interest, it is completely exempt. But if he had sold it for 370 per security, then you see guys, what is the sale price per security? Let's make it in lakhs. So 370 per security into 10,000. Correct. So it is 37 lakhs. Sale price is 37 lakhs. Cost only is 40 lakhs. Why? Because I had bought it at 400 rupees. 400 rupees. Correct. 40 lakhs. What is the short term capital loss? 3 lakh. What is the income that you have earned, my dear friends? You have earned 20 rupees per security. So 20 into 10,000 is 20 lakh. As I told you, if the loss is less than or equal to income generated, section will not apply. But in this case, loss is greater than the income. Hence, to the extent of the loss, to the extent of the income, it will be allowed to be set off, which means this 3 will be used to set off against this income 2, but this one will be ignored. This one will be ignored. Balance to be carry forward means it will be ignored. It will not be taken into consideration for any computation. I will not reduce the, income further. Moreover, I will not use this loss, this 1 lakh loss, 1 into 10 lakh loss, not allowed to be set off. One lakh will not be allowed to be set off. That's what. When it said it shall be ignored for the purposes of computing tax means it shall not be allowed to be set off. Next year, if I make any other gain, then I'll be allowed. Only under this head I'll allow. I'll not allow it under any other heads. For example, long-term capital gains can be used to set off the short-term capital loss. This short-term capital loss will not be allowed to be set off against any long-term capital gain. That's what it means. So balance 10 lakh will be carried forward. This is called as interest stripping, my dear friends. Very, very simple. So important. Just for here and there, for MCQ, etc., they can ask you. Next, let's come to another interesting area, bonus stripping. Bonus stripping. All right, guys. So we will be discussing bonus stripping. So guys, this is important because there has been a very important amendment as per Finance Act 2022. What is this bonus stripping transaction? Very simple, guys. Let's say there are around 1 lakh. I have around 10,000 shares, okay, of some company. Let's say I have 10,000 shares of Infosys. I know that every year Infosys declares dividend, and Infosys, I also have a notion. I'm a market, researcher. I keep an eye on the market, assume, and I know that when Infosys will declare bonus, etc. Even if you go to any website, your NSE, BSE, you can check all the companies that have declared bonus and what are the dividend, bonus rates. There are X bonus rates and bonus rates. That is, after the bonus, whatever it is, the rates obviously will shoot up, as you know. So let us say Infosys declared 1:1 bonus and the bonus rate is around 500 rupees per share. So let's say 2000 rupees. Let me make it a little higher, 2000 rupees. So now I will buy 10,000 shares. Well, let's say I'll just buy 1000 shares, right? So I pay 20 lakh rupees and buy 1000 shares. This is bonus amount. That's why the per share amount is high. Immediately after issuing bonus, I will buy this. So now 1:1 bonus, right? So how much will I get? I will now get 2000 shares. Initially I got 1000 shares at 2000 rupees, 2000 rupees because it's a come bonus rate. So as of now I have 2000 shares. Because it is 2000 shares, the market value becomes obviously 500 rupees. Sorry, market value becomes from 2000 it becomes 1000 rupees because I've got 1:1. So now I have 2000 shares and the market value slowly has decreased to 1000 rupees per share. Now what I'll do, guys, I will sell the original 1000 shares that I bought. The original 1000 shares that I bought, I will sell. So I will sell obviously at a lesser rate, correct? So what happened was initially I selling price of those original 1000 shares at 1000 rupees per share would be 10 lakhs. Cost of acquisition is how much? I bought initially with 20 lakhs. So what would be my short-term capital loss, guys? It will be 10 lakhs. Short-term capital loss will be 10 lakhs. The beauty is only 1000 shares have gone out. 1000 shares had come in, but that extra 1000 shares I still have with me. So this also, whenever I want, I can sell, or next time when they issue bonus, I can sell it, I can play around. But here also same thing has happened. This short-term capital loss of 10 lakh will be set off against some long-term capital gain. This is what planning I generally do. I buy 1000 shares, I wait for the bonus, 1000 will become 2000 shares, then I sell the original 1000 shares. So at the end of the day, I will have retained 1000 shares, but I also have a loss of 10 lakh rupees. This 10 lakh will be set off against some income. That is long-term capital gain. Many people used to do this. That is why the concept of bonus stripping came. The bonus stripping can happen in shares, that is securities, or it can happen in mutual fund units, just like the previous one, interest stripping. That was interest stripping. This is bonus stripping. My dear friends, till 2022, people could have still played around with this. Bonus stripping was restricted only for this. From Finance Act 2022, and that too from a date which is 1st April 2023. 1st April 2023. This is the amendment. What they have done now is they have also extended the restriction to what? Shares as well. So now any share, that is security, or any units of mutual fund that you buy, how many months before? 3 months before. 3 months before the issue of the record date, the date when which the company issues bonus, 3 months before or 9 months after. They have streamlined it with 94 subsection 7. 94 subsection 7 also told the same thing. 9 months. So 9 months was for only for securities units there. Here it is for both 9 months. 3 months before you buy, 9 months after you have sold. See here, person who buys or acquires any units or securities for a period of 3 months prior to the record date, such person is allotted or entitled additional units of securities bonus without making any additional payment. He sells or transfers partly or fully the original units or securities while continuing to hold all or any of the additional units. What have I done scam here? I have got a short-term capital loss of 10 lakhs while I still continue to hold 1000 shares. While continuing to hold all or any of the additional units within a period of 9 months from the record date, then the loss, if any, arising to him on account of transfer of original units or securities shall be ignored. The loss, when whatever is arising, will be completely ignored, and the amount, but I'll give you one benefit, the amount of loss so ignored shall be deemed to be the cost of acquisition of such additional units. So guys, this generally, what is the cost of acquisition of bonus shares? Nil. but I'll give you some benefit. Instead of taking nil cost of acquisition, take 10 lakhs as the cost of acquisition of 1000 shares. That's it. Benefit is given. But this I will not allow you to set off this. Setting off and all I will not allow. I will not allow you to set off this short-term capital loss against any long-term capital gain. But one benefit I can give you, I can ensure that this loss, whatever you have made, will be taken as cost of acquisition of the additional units and securities balance as at held by him on the date of such transfer. So if I sold, this is assuming I sold 1000 shares here. 1000 I bought, 1000 I sold. What if I purchased 1000? What if I sold 1500 at let's say 25 lakhs? Then here the remaining 15 lakhs is the loss. Remaining shares are 500. So guys, remaining 500 shares, cost of acquisition will be deemed to be 15. Cost of acquisition will be deemed to be 15. What if I purchased 1000 shares and I sold not only that 1000 plus the entire remaining bonus 1000 also. 10 lakhs I purchased, I sold it for let us say 28 lakhs. Then my dear friends, entire set is sold, right? So what is the loss? 18 lakh is the loss. So in this case, 94 subsection 8 will not apply. Concept of bonus stripping for this will not apply because bonus shares are not there only. I am not stripping the bonus of anything. I am not making use of the bonus shares. I have sold the entire bonus share. This is a genuine capital loss. This for this section will not apply. When will section apply? First of all, there should be a loss. Second most important thing, there should be some bonus shares pending. Basically, whatever bonus you got, if you have sold everything, then no problem. But there should be some bonus shares pending, not additional this thing. What do you say? Not original shares, but bonus shares. You see, while continuing to hold all or any of the additional units. What if I don't hold any additional units? Then no problem. Then the section will not get attracted. Why is this important? Because the amendment is from what? Finance Act 2022. That is the amendment. Securities also added. Till now you could have played around with securities. Now not possible. Record date means the date fixed by a company, mutual fund or UTI, business trust or any alternate investment fund for the purpose of entitlement of the holder of units to receive dividend. Dheeraj acquired 10,000 shares of Chota Beam Limited on 250 per share on 23/9. Chota Beam allotted 5,000 bonuses on the record date. All original shares were transferred at 200 rupees. There's a loss. He subsequently transferred 3,000 bonus shares also on 10/2. Remaining 2,000 on 14/4. Within how many months? Yes. Original shares were acquired within 3 months. Original shares were sold within 9 months. In this case, loss on sale of original unit shall be ignored and it will become the cost of acquisition of bonus shares held by him. Record date is 15/11/2022 and I've sold the original shares when within 9 months. I've sold it within 9 months. You see, even till the year end, I have sold it. So you see here, for example, computation of capital gain, consideration received is so in 200, law cost of acquisition is 250, short term capital is 5 lakh. This 5 lakh is deemed to be the cost of acquisition of the remaining units. It cannot be set off or carried forward. It has cost of acquisition of the remaining, that is 5,000 bonus shares. However, I sold the bonus shares also. How much will it be? See, cost of acquisition, I will take it as 5 lakh. 3,000 into 150 rupees is what I sold. So here I will take it as cost of acquisition 3,000 by 5,000. Overall 1,50,000. Remaining next year 2,000 I sold. Again 5,000 is the 5 lakh is the cost of acquisition into 2,000 shares by 5,000 shares. But as I told you guys, because on 10/1/2023, while continuing to hold all or any of the additional units, mind you, while continuing to hold all or any of the additional units. What if on 10/1/2023 only I had sold all the units, that is 10,000 shares plus 5,000 bonus shares, full 15,000 if I sold, will this section attract? That is this point. If Dheeraj had transferred all original shares and 3,000 bonus together, 3,000 bonus together. So here, if Dheeraj had transferred all the shares, original bonus together on 10/1/2023, 94.8 will not apply. But what if I had sold only 3,000 out of 5,000? Then the same thing, the loss of 5 lakh will be the cost of acquisition for the remaining shares, 2,000 shares. So what would be the capital gain for the 2,000 shares? 2 lakh into 90 rupees minus 5 lakh. Very simple. In this example, I told you all if I have sold, then no tension. That's all. So this completes 2 marks MCQ. They can ask you bonus stripping, bond washing, interest stripping. Now let us get back to the chapter 6A, guys. Chapter 6A. Payment based deductions. Come to page H1, H2, H2. Yes, guys, come to H2. Payment based deductions, ATC. Now, why are we doing this? Because when we do section 91 in international taxation, there they'll give non-resident fellow invested in is paying interest on loan for buying house property or has taken a life insurance policy, etc. Like that adjustments they'll ask, correct? So predominantly the basic adjustments will come in CA Inter, but these extra adjustments, heavy duty the adjustments will come in CA Final. So we will only concentrate on those adjustments. So ATC, what is it? Reduction in respect of life insurance premium, contribution to PF, etc. is one of the most basic exemptions, reductions that you'll be getting. ATC. Eligible SSA is what? Individual or HUF. Maximum amount of reduction, as you know, my dear friends, if you have made the payment to this extent, you will get 1,50,000 worth of deductions. What are the investments, eligible investments? Life insurance premium. Actual amount paid towards premium on life insurance policy. Actual amount paid, not payable. Actual amount paid. You should have made the payment during the year. Who are the specified persons? It will include for individual, self, spouse, and children. For HUF, any member. Spouse means, sir, step spouse and all covered, sir. Some people have 2-2-3-3. In one area, one people they would have maintained 8. There is only actual legal spouse and children. And for HUF, any member will be covered. Life insurance premium, the restriction on deduction will be this itself. If policy issued before 1/4/2012, then entire policy premium paid or 20% of the sum assured, whichever is less. If it is on person with severe disability, but if it's a normal person, same 20%, whichever is less. Policy during financial year 2012 or 13, it is 10%. Anyway, for us relevant stuff is this, guys. If policy issued on or after 1st April 2013, premium paid or 10% of sum assured, whichever is less, is what the amount which is what? Actual amount paid that is allowed. Premium paid or 10% of the sum assured, whichever is less. The sum assured is 1 crore, 10% is 1 lakh, and you are paying 80,000. So 80,000 or 1 lakh, whichever is less. If you are paying premium 1 lakh 10,000 and your sum assured is 1 crore, that much nobody will pay. I'm just saying. And in that case, 10%, 1 lakh or 1 lakh 10,000, whichever is less, so 1 lakh. So, but for severe disability, I'll give you some benefit, 15%. And my dear friends, of course, in 1010D also, linked to this is 1010D. Any income, any sum received from these policies on the death of the insured also will not be taxable. So, on death sum received not taxable, except however Keyman insurance policy. This is an additional point. In Keyman insurance policy, if I pay premium, then of course that premium etc. will be allowed to you in business. We have seen that. But what about the amount received on death of the Keyman? In that case, any amount received will definitely be taxable. That also we have seen in PGBP. Contribution towards deferred annuity plan of LIC, contribution towards ULIP of UTI, LIC, etc. All these things. Life insurance policy, if the SSC terminates its contract of life insurance policy or fails to pay premium of 2 years or unit linked policy for 5 years, no deduction shall be allowed in respect of the premium paid in the year of termination. That year you will not be getting. Also, the deduction allowed in the preceding previous year shall be deemed to be the income of the SSC for the previous year in which the insurance policy is terminated. So, previous year also will be added. These other funds you would have studied in Inter, you can just go through. RPF, you know, approved, we have seen this. Sukanya Samriddhi account scheme, notified savings, and NSC, notified units of mutual fund, and all those things. Term deposit for a period of not less than 5 years with a scheduled bank. That is also there, any term deposit, but this should not be pledged as a security. Then bonds issued by NABARD, National Bank for Agriculture and Rural Development, that also will be there. Deposit in senior citizen savings scheme. Amount withdrawn from post office time deposit scheme or in senior citizen savings scheme before the expiry of 5 years shall be liable to tax. Where a legal heir or nominee receives such sum on the demise of the SSC, as I told you, same shall not be subject to tax. Again, housing, this can be one more important area. Repayment of any loan borrowed from financial institution or bank for the purpose of purchase or construction of residential house property, not commercial house property, residential house property. Deduction in respect of any expenditure incurred towards stamp duty, registration fee, and other charges, etc. is also available. Deduction is not eligible in respect of payment made toward costs towards any addition, alteration, or renovation or repair. No, it's only for construction, minor renovation, repair, etc. You will not get any deduction on repayment of any loan. Any expenditure in respect of deduction is allowable under section 24 of house property. Property under construction you will not get. Only after it's constructed, so you will get that pre-construction interest also, which you would have seen in house property. Principal repayment on loan borrowed for acquiring commercial property is not eligible for deduction. Similarly, residential property under construction for which principal has been repaid also does not qualify for deduction. It's only after construction. Repayment of loan borrowed for housing from relatives, friends, non-specified employees are not eligible for deduction. Interest paid will be deducted anyway under section 24. If the SC transfer the house property before 5 years from the end of the financial year in which possession was obtained, and all deductions allowed will be deemed to be income of the SSC, that we have seen. Tuition fee is there, then others. Tuition fee for full-time education in respect of 2 children and other things. Contribution to this PPF, etc. Guys, I am reading it like some what you would have probably seen on other YouTube videos where people read and go. I'm reading like that only because all that we have covered in CA Inter, and moreover these things will not come. What will come in this, I'll tell you. As I told you, what may be will be important is this life insurance and housing, and that too not from a normal point of view. They'll ask non-resident taxation. I am just doing this now so that when we reach non-resident taxation, I will connect it there. That time I'll ask you questions, then you will be able to answer in a better way. Okay. So let's see the other important ones. 80CCC, reduction in respect of contribution made to certain pension funds. Who is the eligible SSC? An individual. What are the eligible investments? Contribution made to any annuity plan of only 2. One is LIC of India and any other insurer approved by the IRDA. So it covers almost everything, because without IRDA's approval, you anyway cannot run any insurance company. What is the amount of reduction here under 80CCC? 1,50,000. There is any annuity plan thing, where the SSC or his nominee surrenders the annuity before his maturity. Surrender value including bonus interest shall be taxable in the year of receipt. So till maturity you cannot surrender. Amount qualifying for reduction under this section shall not be eligible for reduction under ATC because it's a different section annuity plan, ADCCC. ATCCD we will combine with other sections and do it right now. That will be the last part of the discussion. Others will finish it off. This will discuss, guys. CCD. So it's cover everything is I've made it here. That will be easy for you. We'll come to that. Health insurance premium, ATD. Eligible SSC, individual or Hindu underwrite family. Eligible expenditure, medical insurance premium, central government health scheme, preventive health checkup, and medical treatment for specified persons. Who are the specified persons, guys? For individual, mind you, it is self, spouse, dependent children, parents, whether dependent or independent, mind you. And for HUF, any member. It should be dependent children only, dependent financially to the with the parent, for the money, for their money, financial dependency on the parents. So these are the things which are eligible. One is Mediclaim insurance premium, contribution to the central government health scheme, notified scheme, preventive health checkup payment, maximum 5,000 rupees, aggregate for what? Self, spouse, dependent children and parents, and general deduction. So overall, guys, if these three are eligible. CGHS for parents, individual paying for the parents, it is not eligible. And for HF only, this medical insurance is eligible, not other things. What are the general deductions? 25,000 each. On the other hand, if your parent is a senior citizen, if your parent is 58 years of age, then obviously you will not get any additional deduction. Maximum deduction you will get is 25,000. For example, Prithvi Shaw, he is around 23, 24 now. He is paying for his father 58 years. So for him, how much will it come? 25,000 is a general deduction. What all will come? Mediclaim insurance, contribution to CGHS, and they do some health checkup. Health checkup, he will spend some 5,000 rupees for his dad. Will it be covered? Yes. But if you are giving to a resident senior citizen, mind you guys, this is where they'll play around in section 91 international taxation. They will say a person paid 5,000 rupees for his 62-year-old father who is residing in United States of America. Will this extra 25,000 come? No. This is where we need to be alert. This is important. Mediclaim, if it is taken by whom? Resident senior citizen, additional deduction of 25,000. You have taken a Mediclaim insurance and you have paid this amount. For you 25,000, your parents 25,000. Will it 50,000 be allowed? Yes. Here also allowed, here also allowed. In all the three cases, it will be allowed. Medical expenditure on the health of a senior citizen if Mediclaim insurance is not paid on such senior citizen. In all the three cases, it's available. Overall amount of reduction is 50K. Medical expenditure, guys. If Mediclaim insurance is not taken, extra expense you have to give, no? If it is not paid, extra. If insurance is not paid, but extra you have to pay. Those out-of-pocket expenses, extra expenses. See, for example, in the Mediclaim, only 3,000 rupees. For example, only bed worth 3,000 is taken. But you have, what do you say? Admitted him in a super luxury hospital where the bed is 8,000 rupees per day. So 5,000 rupees extra you have to pay, right? So up to that additional deduction of, amount of reduction 50,000. But mind you, this 50 plus 50 overall maximum 50 only you will get. This is all up to 50K. So overall deduction you will only get up to 50,000. That's all it is. Some interesting things. Deduction of medical insurance allowed for parents will be allowed even if parents are not dependent. We have discussed. The concerned parent is entitled to separate deduction in respect of amount of premium independently paid by them also. This is children paying for the parents. Apart from that, they themselves can pay separately. That is covered for them. So there is double benefit. Payment for the above expenditure we made in any other mode other than cash. Cash payment if you go wrong, over. No deduction if you pay cash. But one extra thing is there. Only payment towards health checkup can be made in cash. This one. Only this can be made in cash. Nothing else, guys. Only health checkup. Important. So there was a problem when I used to pay. For example, this policybazaar.com. I remember when I got COVID, I had some stupid health insurance policy, and the hospital bill for 6 days for some 3,75,000. Yes, I had my insurance covered only some like bloody 60,000 or something. Remaining whatever I had saved up money, I had to pay from that. And in the first thing that I did after coming out of the hospital was to go for a 2 crore health policy. Not 2 crore, 1.5 crore or something. But today, if anything happens, 1.5 crore, up to 1.5 crore, it's covered. So even if the payment is high, yes, the insurance, the premium only was, if I'm not wrong, around some 80, 90, 1 lakh rupees per annum is the premium. I took a 3-year premium policy. So 3 lakhs, instead of 3 lakhs, they gave it to me at 2,80,000, 20,000 rupees discount. Now, if I pay 2,80,000 for 3 years, can I claim 2,80,000 this year? No. Should I take it proportionately? The Bare Act was unclear. So Arun Jaitley, before of course his passing away in his last budget, he did all important things and he unfortunately passed away. This was an amendment brought in by Arun Jaitley ji. He said if you have paid your premium in lump sum for more than 1 year, reduction shall be allowed in each such year in which the insurance shall have effect or be in force. So you can take it yearly. So see the example, it's important. An individual paid premium in lump sum towards health insurance amounting to 1 lakh on 1/8/2022. Insurance policy shall expire on 37/7/2027. So guys, from the day you pay till the expiry, 6 years in this example, you will get every year 16,667 depending on the duration. Person with disability, you will get for again resident individual or resident HF, not for non-resident. If they ask you, the SSE is living abroad, for him and he is paying for a person with disability in India, not allowed, because it's only for resident individual. Any expenditure incurred for the medical treatment, training and rehabilitation of a dependent person with disability, amount paid or deposited in a scheme framed by LIC or insurer or approved institution. How much, guys? 75,000 with disability, 1,25,000 with severe disability. Flat deduction this is. This is a flat amount. Flat deduction. This is irrespective of any amount. Any amount deposited. It's a flat deduction of so much. Dependent means for individual what? Self, spouse, children, parents, siblings, for HUF any member. SSE must nominate either a dependent with disability or a trust or any other person to receive the payment. If the disabled dependent dies before the SSE, amount deposited or paid shall be deemed to be the income of the SSE in the previous year, and the amount is received. Yes, if the dependent only dies. The SSE claiming a reduction under section shall furnish a copy of the certificate issued by the medical authority along with the return of income saying that this is the person with disability. An annuity or lump sum will be paid with disability in case of death of the SSE or the dual condition of SSE attaining 60 years of age and payment to such scheme has been discontinued. Guys, these are all amendments. Point number 2 and 4. If the disabled dependent dies before the SSE. So I have paid for a dependent, he dies before me. Then amount deposited or paid shall be deemed to be the income of the SSE. If you take an insurance, they will pay some lump sum, no, that will be deemed to be my income. On the other hand, an annuity or lump sum will be paid on the person with disability in case of death of the SSE. SSE only dies means either that or dual condition of SSC attaining 60 years and payment to such scheme has been discontinued. Both conditions should happen. Because in the scheme, it will be written that if you turn 60, the scheme will be discontinued. So if SSC attaining 60 and payment to such scheme has been discontinued, amount is received by whom? It shall not be deemed to be the income of the SSC and no tax will be charged. So in two cases, there will be no tax charged. Which are those two cases? This is important, guys. Amendment. In two cases, income will not be charged to tax. First one, the SSC only dies before. SSC only dies before the disabled fellow. Second case, SSC is alive, but he attains 60 years of age, and there's a term in the contract which says once you turn 60, the payment to the scheme will be discontinued. Basically, you are not paying anymore. And since you have, the scheme only is discontinued now because you have stopped paying. Ideally, I have to penalize you, but since you have turned 60, you see, any amount that is received shall not be deemed to be the income of the SSC and no tax will be charged. So, what are the two conditions where no tax will be charged? First one, an annuity or lump sum will be paid to the person with disability in case of what? Death of the SSC. Or dual condition of the SSC attaining 60 years of age and payment to such scheme has been discontinued. So that lump sum that whoever receives it, that will be tax free. That will be tax free. These two are additional things. Disability means blindness, low vision, leprosy cured, hearing impairment, etc. Person with disability means 40% or more of the disabilities. Person with severe disability means 80% or more of the disability. Yes. So guys, now let's go into this new pension scheme, ATCCD. This one is ATCCD. Let's make one nice chart whereby all the things are given. This is the new pension scheme. New pension scheme master chart. Important. That's why I told you wherever I feel that my contribution is required, I'll give. Other things you are just reading and telling the overall things. That's enough. Because simply bringing around inter-syllabus and again repeating it doesn't make any sense. So wherever in final adjustments will come, I'm gonna do that. Like this. We are gonna do it like this. So guys, earlier this new pension scheme, right? Generally, your PPF scheme is always the EEE concept. That exempt at the time of investment and exempt returns as well and exempt at the time of maturity. Whereas the new pension scheme was always exempt taxable. Means exempt at the time of investment, exempt income, whereas taxable at the time of maturity. That's why nobody used to invest in NPS. But Arun Jaitley again removed many restrictions and then ensured that you will also get a lot of exemption. So basically from EET it almost became EE only, but with many it's not. I'm not saying it's not at all taxable, but restrictions are removed. So based on that logic, let us just check a few areas. So the first section is 10 clause 44. 10 clause 44. They say income of new pension scheme trust. Income from new pension scheme trust is exempt from taxation. So any income you will get would be exempt. Then we have 1012A. 1012A, which says that if you close the account, closure of account. But then again, if I again divide it into two parts, closure of account if the What do you say? Person SSC is alive. One more is closure on death. If it is closure on death, not taxable to the nominee. Not taxable in nominee's hands. Whereas if the SSC is alive, 40% is exempt. 60% is taxable. 40% exempt, 60% taxable. You just study this and go, more than sufficient. I am combining all sections, that's why it's a master chart. Then if I see 1012B, this 1012A, mind you, this is for either a central government employee or any employee, guys. So this is anybody also, or not just any employee, anybody who wants to go into NPS. It is for employee as well as non-employee. So can others also invest in NPS? Those who are into business also, can they do it? Those who are having other income also, can they do? Yes. Whereas this 1012B on the other hand, this is only for employee, nobody else. Only for employee. So this is partial withdrawal. Partial withdrawal. So any payment where you have withdrawn partially, 25% of the overall contribution is exempt. 25% of the overall contribution is exempt. 25% of the overall contribution would be exempt. For example, and where will you do the contribution, guys? Contribution will be done in 80 CCD. So, for example, the scheme till date, you have contribution you have made under 80 CCD, let's say, is around 5 lakh rupees. Partial withdrawal will make partial withdrawal of 2 lakh rupees. So what is exempt, guys? Exempt is 25% of 5 lakh, which comes up to 1,25,000. This is exempt. How much is taxable? 2 lakh minus 1.25 lakh. 75,000 would be taxable in the new pension scheme. Right? Amount received on maturity. Amount received by individual or nominee on maturity is definitely taxable, but as I told you, there are certain different exemptions sort of a thing that they have given. But if annuity plan is purchased the same year, You buy an annuity plan immediately, then it is not taxable. So I am giving you benefits that boss, okay, you withdraw, I mean, it's matured, but immediately invest somewhere. This is to again ensure that you keep on investing. Then it is not taxable. Apart from that, two other things. 1013B. This is only for employee. Only for employee. Transfer from approved superannuation fund. So you will get some money from superannuation fund. And if you transfer that money from approved superannuation fund to NPS, approved superannuation fund to NPS, then what? It will be, what do you say, exempt or not exempt. So just for transferring, etc., guys, it will be exempt. There will be not taxable. It will be 100% exempt. Then last but not the least, guys, with this basics, now we'll have to come to ATCCD. So if you just see, this is what we did. Finally, ATCCD. ATCCD. All leads up to this only, ATCCD. Now, ATCCD, it depends, are you an employee or you are a non-employee. For non-employee, very, very simple, guys. You will get 1,50,000. 1,50,000. Ceiling 1,50,000 along with ATC. It is along with section ATC. Apart from that, you will also get an additional 50,000 rupees deduction. Additional 50,000 rupees deduction for any amount deposited by him in the National Pension Scheme. Apart from that, you will be, the ceiling limit would be 20% of gross total income of that person. 20% of the gross total income of that person. An overall limit of 1,50,000, which is along with his ATC deduction, an additional 50,000. As far as employee is concerned, whether employee's contribution will come or employer's contribution. Employee's contribution or employer's contribution is what we need to see. Employee's contribution, it is 10% of salary. 10% of salary. Basic plus DA and other allowances, if it forms part of the contract, it is allowed. 10% of the salary. 1,50,000 rupees is the ceiling along with ATC. Along with ATC. And of course, guys, you will get additional 50,000 rupees. Employer's contribution, my dear friends, employer's contribution. Employer's contribution, it is taken as employee salary. It's taken as part of employee salary. And again, 10% of salary is what is given a deduction here. Only for central government employee. For central government employee, it is CG employee. Non-CG employee, CG. For CG employee, it is extra 14% is taken. 14% of salary is taken as far the employer's contribution is concerned. But this most important here is, it is what? Not subject to. This is not subject to. Contribution, I mean, this is entire thing is not subject to rupees 1,50,000 ceiling. Not subject to 1,50,000 ceiling. It is over and above that. It is not subject to that ceiling limit. It is not subject to that ceiling limit. So this is extra you're gonna get. ATCCD. Check out here. Eligible SSE and individual eligible investment. I am reading, guys, page number H4. Contribution to pension scheme notified by the CG. Eligible deduction for contribution ATCCD 1. In case of individual employed by central government or other employer, salaried employee, employer's contribution are 10%. In case of any other SC being an individual, 10% of GTI. We have seen all that. Basic plus DA if the terms of employment so provide. So rather than other allowances, you can just make it basic plus DA. So basic plus DA if allowed. 1 second. Basic plus DA if allowed. Additional deduction of 50,000. This additional deduction is allowed irrespective of whether deduction is allowed under ATCCD 1 or not. No additional deduction shall be allowed in respect of amount already claimed under ATCCD 1. Yes. The employee contribution of 1,60,000 and his salary was within the meaning of ATCCD 1 was 10 lakhs. Deduction eligible under ATCCD 1 is employee contribution or 10% of salary, whichever is less. 1,60,000 or 1 lakh, whichever is less. So 1 lakh. Employee can claim deduction 1 lakh under ATCCD 1 and remaining deduction of 60,000 can be claimed under ATCCD 1B, but up to maximum of 50,000 rupees. Maximum of 50,000 rupees. Deduction towards employer's contribution, as I told you, for central government employer it is 14% of salary, or any other employer it is 10% of salary. Employer's contribution to pension scheme shall be chargeable as salary. It should be taken as employee salary, as I told you. Amount qualifying of deduction will not be eligible for deduction under section ATC. It is extra, separate. So all that we have discussed already. This entire thing, refer the chart. Refer the chart. So ATC 1,50,000, ATCCC 1,50,000, CCD 10%, other employee 20%. But guys, ATCCD says, CCE says, sorry, everything put together overall 1,50,000. But ATCCD 1B, that 50,000 rupees is extra. ATCCD 1 and of course CCD 2 we have already seen. 14% and 10% is the limit on sections ATC, CCC and CCD. Very, very simple. So this is done. So guys, moving on, and ATD done. DD done. Specific ailments. There are certain other ailments. Similarly, for 60 years or above, 1 lakh rupees. Others, 40 years. Other ailments. Loan for higher education. ATE, you will get interest on loan for pursuing higher education. These are all CA inter, guys. In final, generally they will not give, but it's they can just go through this. Simple. Interest amount for a period of 8 consecutive years, starting from the year in which the SSC starts paying interest, will be given here. Yes, you see ATE. Remember in the ATIA section, for builders, there was, for a residential property which is value is, stamp duty value is around 45 to 50 lakhs. There were benefits given for builders. But what about the buyers? What about the customers? So for customers and buyers, allottees, this section is there. Interest on loan taken for residential property. This one, certain house property, EEA. This one, EEA. ATEEA is for such people. Whereas normal home loan 80E, residential house property 80E, but for those lower middle class residences where stamp duty value doesn't exceed 45 lakhs, as we have seen in 80IA, 80EA will come into the picture. 80E is CA inter, sorry, 80EE is CA inter, whereas CA final you may also get 80EA. But this also will just go through. Eligible SSC will be what? Individual. Amount of reduction maximum 50,000. This is for normal house. It can be stamp duty value 1 crore also, doesn't matter. Conditions for applicability. SSC has taken a loan for the purpose of acquiring residential property from any financial institution. SSC does not own any residential property on the date of sanction of the loan. No other residential property you should own. Value of the residential property should not exceed rupees 50 lakh. Amount of loan sanctioned for the acquisition of residential property does not exceed 35 lakh. The value should be 50 lakh and amount of loan does not exceed 35 lakh. The loan has been sanctioned by the financial institution from a period during from which one? 1/4/16 to 31/3/70. So that is no longer there now. Reduction shall not be allowed in any other provision of the section. So this is one. But what is more relevant than this? I told you 1 crore etc. Can it be there? It cannot come under this section. If the house property value is 1 crore etc., it will not come under this section. This section is almost like replaced by this one 80EA. Now this is important for CA final. You should not be eligible to claim under 80EE. Maximum reduction is 1,50,000. The SSC should have taken a loan from bank, banking institution or housing finance company. Yes. This is from 1/4/2019 to 31/3/22. This will be more important for us. Very important for us. Stamp duty value of such residential property does not exceed 45 lakhs. The SSC does not own any other residential property. Interest is payable by the SSC. A reduction under this section is allowed for any interest. Deduction shall not be allowed in respect of any other's provision. Combined notes EEA. It is deduction of other in addition to, mind you. Guys, under house property, normally we can claim interest 24B. Interest on loan borrowed for the purpose of construction of house property. So Mr. X has a SOP for which loan was borrowed as with the condition of 80. Interest paid was 2,30,000. 2 lakh he can claim there, but 30,000 he can claim here. Because it doesn't, it says where deduction is again allowed for any other interest shall not be allowed in respect of such interest and any other provision of Income Tax Act, but of course subject to 24. Reduction would be available whether the residential, and mind you here, no deduction will be allowed. But this will not cover standard deduction at 24. That especially more than standard deduction, I would say 2 lakh loan deduction. Reduction would be available whether the residential property is vacant, self-occupied, I don't care. Benefit of interest should be available till the repayment of the loan. So EE is not too relevant now. EEA will come into the picture. And for loan value 1 crore, 2 crore, house property value 1 crore, 2 crore, anyway we have section 24. This is an additional benefit to ensure housing. This is predominantly one of the sections introduced by BJP for affordable housing schemes under the affordable housing scheme. 80EEB, electric vehicles. 80EEB. Guys, if I buy an electric vehicle in the name of my business, anyway depreciation I can claim, anyway interest on that. If I take a loan on that buying the vehicle, I can claim interest. Then why do I need special deduction? So if you read the section, you will come to know that this would be for predominantly salaried class, not for businessmen. Businessmen anyway can take cover under the respective section that we know. That is, your basic 30 to 36 you can claim, 37 if not. Eligible SSC, individual, amount of deduction maximum 1,50,000. Conditions for applicability, yes, taken a loan for purchasing electric vehicle during 1/4/19 to 31/3/23. 1,50,000. This is deduction on for what? Repayment of interest. Such loan should have been sanctioned by banking company. Interest is payable. Where interest is allowed as a reduction, no other reduction. That's a common point. Electric vehicles means a vehicle which is powered exclusively by an electric motor whose traction energy is supposedly exclusively by traction battery, blah, blah, blah. Guys, basically, it means a vehicle. Vehicle means what? Two-wheeler also covered? Yes. You can buy a two-wheeler also on loan. And the interest that you pay, you will get a deduction. For the entire period of the loan, there is no restriction on the cost of the electric vehicle. Does not matter if the car or the vehicle is used for personal or official purposes. If interest is availed as deduction under this section, the same shall not be capitalized as part of the actual cost for the purpose of availing depreciation. So, because that's what I'm saying, it is not for depreciation, it is not covered, which means this is predominantly for salaried class. Business class will anyway take the deduction, full deduction there. ATG, it is your charitable organizations, etc. This you already know, guys. In CA Inter, though, you study this really well, so you leave that. The Swachh Bharat Kosh Clean Ganga Fund, we have seen that very clearly in CSR. So I'm not going to do all this. You can go through. ATGG. ATGG. This is reduction in respect of rent paid. This is for people who do not get HRA. So eligible individual. Rent paid is allowable as a deduction to the extent of least of the following. Actual rent or 10% of the minus 10% of the adjusted total income, 25% of the adjusted total income, or 5,000 rupees per month. Least of the following calculation you have to do. Adjusted total income for the purpose means gross total income as reduced by deductions, LTCG, STCG, income from lottery, specified income of non-resident, and other sum, share of AOP, BOA, everything you should subtract. This should be a self-employed person or a salaried employee who is not in receipt of HRA. SSC should pay rent for the residential accommodation, and accommodation should be occupied for the purpose of his own residence. SSC, his spouse, minor child, HUF, who is a member, should not own any other residential accommodation, including minor child, at that place where he ordinarily resides. Should not own any other self-occupied property also in any other place. Basically, it is for giving benefit for those people. This only if they ask also, only in MCQ they can ask, guys. Otherwise, you leave it. Only in MCQ they can ask for 2 marks, if at all they ask. Otherwise, I don't see any question being asked. I hate doing these chapters because I have to go fast. And there is no value addition from my side. Horrible. I hate it. But what to do? Correct. I am also seeing, I am summa reading, like on shit I am teaching, I also know. Because these are useless provisions. I don't want to waste time on this. I can teach each of these for 2 hours. History when it came, geography, science, social studies, everything. But guys, there's no point. Wherever I have paused and I have given you examples, go through that. Master chart of that new pension scheme, go through that. Barring that, guys, it's a huge subject, guys. Cannot sit and study, I mean, everything in depth. Sit and study everything, but not everything in depth. I hate doing such chapters because I cannot go in depth. It is my problem. I want to go in depth, but it is not needed for exam. Everything we cannot go in depth. I am feeling ashamed teaching this. Not because of the chapter, it's because I cannot go in depth and teach. That's why. So I am reading like one Chaprasi fellow, but what to do? This chapter only is like that. Read. Nothing can be done. Who will remember all this, guys? Actual rent minus 10%, 25%. In 10 days, you ask me, I'll also, I don't know, like this, I will scratch my head. I don't know how you will remember. God bless you. Namaskaram. Yes, thankfully I passed. I cannot remember all this bullshit again. Horrible, guys. Like, who will sit and you ask any chartered accountant, I can assure you, sir, can you please tell me the limit of ATGG? ATGG section is also there. ATG was there in the syllabus. ATGG is also there. Nobody will know also this one. Anyway, horrible sections. I don't know why they'll keep all this. Anyway, come guys. Deduction in respect of, we'll finish off. I'm feeling irritated seeing this. Appa, thankfully 3 more sections over. But yeah, it is there. We will see. No, but we also have in non-resident taxation, we will add those ATTTA, TTB and all that. Again, we will see that in a different way. GGA, GGB, GEC. GGA is for donations for scientific research and rural development, ATGGA. All SSEs except those having income chargeable under the head profits and gains of business. Amount of reduction 100% of the donations you will get. To approved research organization, institutions, university, college whose object is undertaking. Yes. So guys, for those who are undergoing this, who are profit and gains of business, they have 35(1). We have 35, 35(2)(ab), all those sections. We have, this is for others. If I am an individual, I'm a salaried person, I want to invest in Tata Memorial, then Tata Cancer Research, yes, then I will get deduction 100% of the donation. The only important thing here is no deduction shall be in respect of donation exceeding 2000 paid in cash. Up to 2000 only we can pay in cash. And deduction cannot be merely denied if approval granted is withdrawn. It's an approved institution, but at the time of filing the return, it was not approved. MCQ question. At the time of paying, it was approved. At the time of filing your return, it was not approved. No problem. We'll get deduction. Political parties, the greatest people on earth, Indian company, 100% eligible SSE are Indian company. So Reliance Space, this 80 GGB we have already discussed in CSR. 100% of the donation, political contribution, it should be in, not in cash. GGC or any person except Indian company. If you and I want to donate to BJP, Congress and all those people, yes, 100% of the donation. So apart from that, you have ATTTA and TTB, which you will see in international taxation, which becomes important. ATTTA in respect of interest and deposits on savings bank account. This is savings bank account. And ATTTB. This is savings bank account plus FDR interest plus FD interest. This is, mind you, only for resident. Whereas ATTTA, this will be for resident or non-resident. Resident or non-resident. Check this. TTA. Any individual other than resident, senior citizen or IHF. ATTTA. Other than resident in ATTTB. So if you see, TTB is what? Resident, senior citizen. This is any individual other than ATTTB fellow. If you see, ATTTB is for resident, senior citizen. TTA is for resident and non-resident other than the TTB fellow. Savings bank income from a bank, actual interest or 10,000, whichever is lower. Time deposit, recurring income, fixed deposit shall not be eligible. Whereas in this case, actual interest 50,000, whichever is lower. Savings bank, recurring deposit, fixed deposits are also eligible for reduction. They will ask for non-resident covered in ATTTA. Will he be covered? Yes, he will be covered. That will be asked in MCQ. They'll ask. They'll give you scenarios. 63-year-old person living in United States of America is earning savings bank, recurring fixed deposit interest, 40,000 rupees. Exempt or not? No. Why? For them, TTA will come. That's all. Medical authority disability ATU 75,000, severe disability 1,25,000. All that you can go through this. ATP and all we have done. That's all, guys. Very, very simple. Done. So this chapter is also over. So the next class will be starting with an interesting area which can come for 4 to 6 marks, but then it will come in MCQs or it will be linked with total income problems, etc. Capital gains, which will start in the next class. See you. Sorry guys, if you felt bad little bit, I have to go fast because these areas I do not want to waste time. It is a criminal waste of time. Wherever it's important, I have discussed. Other things, it's going to be like that only. Okay. Capital gains and all you have to discuss in depth. Here, these small chutku chapters, if it is not important, I am not going to waste your time. Okay. See you.